good evening, everyone. Thank you so much for logging in today. So today we've invited Prajit Bhandarkar from Varanium, and he's running a fund called Varanium Next Gen Fund. So basically, the whole idea is to understand more from him in terms of how this fund is positioned and how do we sort of participate in the digital story of India. So Abhijit brings about almost 18 years of experience in the industry, and before taking over this fund. As a fund manager and a portfolio manager. He was associated with Yes Bank, and he also had an opportunity to work with Reliance Jio, the payment gateway. So at Yes Bank, he was the president heading their merchant banking. And at Jio Payment, he was the one who was instrumental in terms of conceptualizing the payment aspect. So he's an MBA from NYU, and he's also completed his CFA and Chartered Accountancy. And now he's one of the I would say one of the participant or investor in the fund. So he himself invested all his money in the fund. So he's got complete skin in the game, and he's running a fund called Varanium Next Gen Fund. So today, Pajit, firstly, let me formally welcome you on the show of Ask the Expert. So, Apajit, what we do is every month we invite industry experts like you. And why we call it Ask the Expert is because we invite industry expert like you, and we understand more in terms of how the markets are headed. How do you see what is your approach? How do you invest your own money? And then we also have meaningful conversation, more sort of interactive conversation with our investors, wherein the whole idea is to exchange ideas with each other and resolve their queries as well. So over to you, Prajit. If you could just give us the understanding about how India is positioned at this point of time in terms of digital play, and how do we participate in this growth journey, and how do we create wealth. So over to you, Prajit.
Thanks, Vikas. Good afternoon. Thanks for joining us and taking out your valuable time. I would just want to make a quick introduction. So the way we will do this is I want to do the next 15 minutes. I'll make a quick presentation. The presentation will cover the India landscape, fintech, opportunity, etc., our firm and what we do. And the second is, after that, we will do a Q&A for about 20-25 minutes, as many questions come up. To quickly give you this thing, my view is that startups are emerging as a new asset class. And as such, the startup assets itself have grown dramatically in India in the last 10 years. If you looked at United States in say 2005-6, they had a few big companies, which was Google, Facebook, Amazon, etc. And now India is somewhere there where we have likes of Flipkart and a bunch of Flipkart and Paytm, etc., and a bunch of others where there is a new age happening. So 10 years ago, India had no fintech unicorns or no unicorns as such. We didn't have a single company which was a startup which was more than $1 billion. Today we have about 38 companies which are counted as unicorns as of 31st December. I'm sure we've added a few more in the last 2 months. Last year,
sorry to interrupt, Apajit. There are few investors who needs to understand more about how do you call unicorn and what definition that you look at.
So a unicorn is
investor. Yeah.
A unicorn is defined as a startup in which some investors come and put a substantial amount of money at a valuation of $1 billion or more. So if someone comes and puts say 30, 40, $100 million in a company at a valuation of more than $1 billion, then that company is counted in the unicorn list. There are some companies who actually have not got that investment, but for a long time they have been counted as unicorns also, just because they are making that much revenue. Someone like Zerodha for a long time wasn't actually had got a lot of revenue. They were making more than 300 crores of revenue, but they had not raised capital. So some people take the liberty of counting them in that unicorn list. Now, of course, Zerodha has raised a little bit of capital. So that is the definition of a unicorn. So in the last 10 years, we have added about 38 unicorns, 11 years, and of which last three of those 11 years, first 8 years we only added 10, and last 3 years we've added 28. So we've gone from adding one unicorn a year almost to about one a month. So last year we added 11 unicorns, and the value of all these is about $125 billion. So about 10 lakh crores is the value that has been created in terms of capitalization by these companies. The second part is fintech. So what is fintech is defined as a convergence of finance and technology to make things better. A simple example of fintech would be 10 years ago we used to go to a shop and swipe a credit card or a debit card, or we used to go out and pay cash. Today, for instance, you need not carry a wallet. You can just take your mobile phone and make payments at shops using a UPI or a payment technology or a Paytm or a Google Pay, etc. So that is one example of fintech. Fintech is one of the largest sectors globally. Of the 570 unicorns worldwide, 75 or about 15% are in the fintech space. In India, of the 38 unicorns, about 8 are in the fintech space. So about 20 odd percent is in the fintech space. This is very similar to what the market capitalization of finance is, which is north of 25% of the market cap comes from financial services. So this is reflecting that, and fintech spreads across the spectrum. So it is not affected by a single activity in the economy. Like there are some unicorns which are travel and tourism. Last year they saw a substantial dip, but fintech companies continue to grow because they get payments or insurance, etc., from various verticals. So that's the second part. The third part is how much money has been raised by these fintechs in India. Just the larger companies have raised more than $13 billion or more than 1 lakh crores. The largest being Paytm, which has raised more than 2,000 crores. Other companies in this space in alternative lending, insurance tech, investment tech have all raised each in the range of more than $500 million, more than 3,000 crores in many of these companies. And some of these companies, if you had put money in, you could make money from anywhere from 20x to more than 200x. To build a fund, catch up is also 10%. So we expect to do about 25 to 28% IRR post our fees and carry, but pre our uh, pre the taxes. So hopefully we will do about 3x to 4x in terms of returns. We expect about a 14% of our startups to fail completely and some to sort of do just about average to return money. But we expect about two-thirds of our portfolio to give 2x to 30x return, which can potentially give this sort of yield to our investors. We have made two investments so far. Hopefully, early next week, we will close our third investment. We have made an investment in a company called Home Capital. This company is helping millennials buy housing by helping them with their down payment assistance. This company has seen a fantastic growth between September till last year, they had some challenges because of COVID, because housing sector was shut. But from September onwards till March, they are seeing fantastic growth. They yesterday did their first securitization deal as well, where they downsold some of their portfolio to NBFC and are beginning to make yields there as well. There are about 7 to 10 investors who have committed some capital to them, and hopefully within the next 6 months there will be a round of about 40 crores or so in this company. Hopefully this should see an appreciation of between 1.5 to 2x. The second company we invested in was Discovery, which yesterday there was a newspaper release. This company has just raised $5 million. Yesterday we came in May last year, where we invested at about $4.75 million valuation. This valuation has now become 17 to 20 million dollars. So our investment has appreciated between 2.5 to 3x in 9 months on this investment. We are making our third investment hopefully early next week. The due diligence has been done and the SHA has been almost finalized. So hopefully we are going to do that. Uh, just a bit about the team itself. My background, Vikas covered, but to quickly say, I have been at Yes Bank for about 11 years, in which time I have raised about 5,000 crores of capital for Yes Bank itself and about 2,000 crores of capital for our clients through IPOs. I have been the head of strategy for Geo Payment Bank, and I was also an investor at a company called Dice Fintech Case, which was a fintech accelerator and fund in which we made investments, and one of those investments has returned more than 100x in terms of outcomes. The head of our firm is a gentleman, founder of our firm is a gentleman called Anant Krishnan. He's also an MBA from NYU Stern, so I know him from my alumni association. He has done his engineering from IIT Roorkee, a CFA, and he's also done a FRM. He has more than 25 years of experience in portfolio management and risk. He was ex CEO of Religare Portfolio Managers, and he started his career with Shambhay Capital, with Goldman Sachs Asset Management in New York. Then he was with Shambhay Capital. Then he came to Prime PMS in India, and that company is sold to Religare Portfolio Managers. And he was a CEO of Religare Portfolio Managers, and he bought out that company to rename it to Verenium. So this company, Verenium, has been in existence for the last 12 years with Anand, but under 3 different names. My research head is a gentleman called Vikram Pandya. Vikram has been in my team at Yes Bank, and then he was advising Yes Bank on their fintech initiatives. He also is the director of fintech at SP Jain Institute of Management, which is ranked one of the top 5 programs for fintech all around the world. He also teaches at ICAI on weekends occasionally, and he has been awarded the Educator of Year by ICAI, and Nitin Gadkari gave him this award in the month of January. And he's also been included in the Central Government Committee for Entrepreneurship and Innovation. So that is Vikram. On our advisory board is a gentleman called Jiten Gupta. He is the founder of Citrus. Citrus was sold by him to Naspers for $130 million, which is more than 1,000 crores. This was the largest purchase by a foreign company of an Indian startup before Flipkart was sold. Post that, he was the CMD of PayU in India, and now he has set up a company called Jupiter, where he has raised more than 200 crores from likes of Sequoia, BNext, etc. The second gentleman so Jiten is on our IC. The second gentleman is Pranav Pai. Pranav is the son of Mr. Mohandas Pai, and he's the founder of 314 Capital. They are also investors in our fund. The third person who is involved with our as an advisory board member is Amrish Rao. Amrish is the CEO of Pine Labs, which is one of the fintech unicorns of India. They have raised more than $350 million of capital, and he is involved deeply in the payment space. Prior to this, he was the CEO of PayU in India and a co-founder at Citrus. So that's a quick profile of our advisory board. What we look at is we look at product and tech. We go deep into the product and tech. We look at how large this space can be if the company succeeds. We look at the team and see what the profile of the founders are and their experience. We see how we can exit this startup, and we also make sure that we have reasonable valuations. We do give up startups where the valuations are not reasonable. We realize that startups fail. This is a data by a company called CB Insights, which is a worldwide leader in startup understanding. And their reasons for startup failures are that startups fail because they can't find the right kind of customers, and the second reason is because they run out of cash. And that means that they can't find investors. So we have addressed this by building a platform which addresses connects startups to investors and customers. And we have collaborated with the government of Maharashtra to set up a platform called Mumbai Fintech Hub Find, which is a website which is there. There are more than 1350 startups that have registered for this, more than 1500 actually startups that have registered for this website, of which 95 we have reviewed and approved, and after verification, etc. And these startups pitch to investors and do POCs with corporates. And whenever we see that there is some traction on the POCs and pitches, we also look to invest into these startups. In the past, I have been a portfolio manager, and I have made about 8 investments. Of these 8 investments, 2 have failed, but the rest have succeeded. So one of these has had a potential return of 100x, but most of them have returned enough money that within 2 years we have returned 2x return to our shareholders at more than a 50% IRR, and the balance shares itself are worth another 0.5x. So almost 65% IRR we've delivered in the past on our portfolio. And one of the companies we invested in was Bank Open. We invested at an 8 crore valuation. This company now is raising money at 4,200 crore valuation. So this investment itself has multiplied 100x. Unfortunately, the company that I was working for was shutting down due to financial reasons of their parent. And this investment actually yielded about, for 2.25 crores that we invested, we got 13.5 crores within less than 9 months weighted average holding. But we could have done a lot better if we had held it a bit longer. Our current portfolio comprises of Home Capital, which we discussed. This has been recently covered by Jefferies, which is one of the largest brokerages in India, and they had covered them in their annual conference, and they are seeing increased traction from investors in this company. The second company we are seeing is a company which is called Discovery. Again, this company is yesterday they closed their round and they are covered in the newspaper. So this investment has already become 2.5x in value within 9 months. The third one we are investing is a company that has more than 3,000 active merchants, more than 30,000 merchants onboarded, processing more than 800 crores of a month of transactions, and they are profitable. So we are looking to invest in them in the next 1 week. So that's from my side. I open it to questions. I will shut the presentation and leave it to Vikas to ask questions.
Yeah, so
And also in the chat group, if you all post any questions, I'm happy to answer them.
yeah. So I was about to make this announcement. So in case anybody has any question, they can type in the question in the Q&A box, and then I can reach out to Aparjit and ask these questions on your behalf. So Aparjit, where do you see this growth of the industry? I mean, Now, post COVID, what was supposed to happen in 2025 is happening in 2021. So, where do you see the industry growing and how do we participate in this growth journey?
So what has happened is that actually we are beginning to see much better, stronger volumes post COVID. One is that because of COVID, a lot of digitization has happened. I'll give you a simple example. In case of this company, Discovery, when we put money in them in May, they were supposed to do about 20 odd company tie-ups by this year end. They already have 45 company tie-ups. They introduced a COVID product and they have marketed more than 2 lakh policies so far within less than 8 months from the time we invested in them. So they are seeing, people are seeing enhanced traction because people are buying things digitally now. Another example was this company we are now investing in is a company called EaseBus. That company initially provides payment services to cable operators, and because cable operators used to collect cash going door to door and collecting cash, they actually realized that they had to collect money, so they created payment links for them and they started collecting digitally. And they also managed to then they have created direct transfer facility between the local cable operator and the larger company who they manage. And suddenly they are actually seeing that the both the players are happy because the money is getting split, transferred directly. And now after COVID also people are paying digitally, so they have not seen a drop off of large volumes who people have moved back to cash, so people are paying digitally and suddenly volumes are increasing. So this company, which was doing less than 100 crores a month of volumes, is now in August is now doing about 800 plus crores a month of volume now. So we are seeing an enhanced growth. I think India as a country should have 70 to 80 unicorns by 2025, of which safely another 10 to 12 unicorns can be added to the fintech space. So if we hit one or two of them, we will have a more than adequate return in the fund.
The thing is, generally people are a little scared when it comes to a sort of disruption which can come in digital play very fast. So, what is your views about that?
So disruption is normal. The the question is, in case of uh, disruption, people who are sitting on top of the system, like the banks, traditional insurance companies, etc., can either get disrupted. So many of these people actually are beginning to partner with the fintechs so that they are also able to keep abreast with the technology. So for example, today evening we are talking to Yes Bank. We also talk to Deutsche Bank, where they are looking to partner with us to set up their platforms to connect startups to their internal systems through API and sandboxes, etc. So, these larger players are also worried. So, they are wanting to partner with these agile, nimble startups so they can also make sure that they are staying abreast. There's a question from Devendra. He's
Yeah,
asked,
yeah, yeah. So he's
do
asking that what is the kind of risk involved in investing in fintech startups? So,
so, two or three major risks. The first risk is, I mean, this is a risk which is inherent with all startup investing, which is basically that startup investing is long term. So, my advice to investors is that they should allocate some money to liquid mutual and liquid products, where if they need emergency money, though that money is kept aside. They could have some exposure to general equity markets, but to diversify their portfolio, they should also invest in startups. But startups are illiquid because they are not listed investments, and to sell anything can take 3 to 6 months. Now, I am holding an investment myself in my own personal capacity. I put money last year at 25 lakhs, has become 60 lakhs. The founder has told me I'll do another round, it will become 2 crores. Now I have to hold on to it to get to 2 crore. If I sell it at 60 lakhs, I'll get 60 lakhs, but in 6 months I can make 2 crores. So that sort of situation may be involved where the you may have to hold for some time to get the optimum return on your investment. So there is illiquidity, and these companies are younger. So I mean, there have been frauds in corporate India, but typically these companies are tiny. They're unlikely to be frauds, but there are likely to be these companies. Models don't succeed. Their models are new, etc. So the risk of early stage investment is slightly higher than later stage investing. But if these early stage investments take off, then the returns can be disproportionate as well. So that is the two risks. And the third risk is, obviously, every time you choose a portfolio manager, the skill is involved by the portfolio manager. So hopefully we get a few more right than other fund managers, but that has to be seen. So far, we've not done too badly.
Yeah. Particularly if you look at the asset management domain, Aparajit, so we are not witnessing too many approvals coming from the regulator. So what is your views about that?
In which side you are talking
The
of AMC or
fintech AMCs.
so fintech AMCs? The recent regulations have been conducive. So they have put a sandbox which is there, and there are a few mutual funds that have been set up, digital mutual funds that are being set up with a lower capital threshold also. Some of them have actually pitched to us also. Uh, but this is actually the SEBI has to be cautious also, because they want to make sure that things are working before they roll it out in the larger market. So I think there will be a few new licenses which will come in the next 2 3 years. Some of it is also because there is a 100 crore capital threshold requirement which they have set out. So maybe in a couple of years, some of these players may be able to raise 100 crores and get that license also.
Yeah, so somebody was making a statement that eventually India will have more fintech than the actual active managers in the portfolio, in the asset.
So actually, a lot of the point about active fund management is that in case of, say, venture capital, there is, we buy securities which are not available to the public. Like, there is the company that we have invested in, Discovery, Easebuzz, Home Capital, etc. They are not listed, and we make a bespoke investment where we do the due diligence. We appoint a Deloitte, or we appoint a chartered accountant firm, a law firm, to do the due diligence into this company, and then we create a customized SHA and we invest. But in case of portfolio management, which is, say, mutual fund or even PMS, not to sort of, they also do an important function, but those shares can be similarly replicated by the investor by buying in the market. And these are frictionless buying, because you can just go to Zerodha and pay 20 rupees a trade and get this done. The problem is that, and a lot of ETFs also compete with a lot of fund managers at much lower cost than the fund managers. So in the long run, in US, only less than half of the portfolio is actively managed. A lot of it is managed passively, and there is going to be in India also that shift to passive management, because it's very hard for active managers to out compete the market consistently.
The other thing is, if you look at particularly the microfinance companies, and there I think the digital window is playing very well. Company like Linden, which is an online platform to support
Yeah.
poor farmers, is shaping up well. So what is your views, and are you planning to add those companies in your portfolio as well?
So I am a bit cautious about putting P2P. It has been not so successful in US, or in China it has been, but there have been a few frauds. In US, it's had limited success. But there are a few companies that are doing well. There's a company called Liqui Loans, which now sort of takes money from individuals, because today what has happened is bank FDs are not giving any yield. Consequently, if you want to get any yield, you have to put money into some other security. So there are companies like Liqui Loans which are buying out invoice discounted invoices and offering 10-12% to people, and who are wanting to deploy up to 10 lakhs each. And so they are able to generate some capital and deploy it with different other fintech players to do invoice discounting or to do some sort of transactions which are innovative. So there is some market which is coming up, but we have been slightly negative on the P2P space.
Yeah, but Aparajit, on the one hand, you have Reserve Bank of India, which is known as one of the most structured regulator in the world, and not India alone. On the other side, you have regulator like SEBI for asset management, and other regulators for controlling the lending business. So particularly in fintech, don't you think that the risk level comes down dramatically as compared to other startup investing, or what is your sense?
To some extent, yes, but to some extent, no. For example, some extent the RBI regulations control some of these players. Like fintech in lending, there is a lot of control because a lot of these players are getting NBFC license and are getting regulated by the Reserve Bank. Some of the players who are doing stock advisory, etc., are taking licenses from SEBI. So there is a certain amount of control, but a lot of fintechs are also doing innovation, and some of them are also unregulated because the regulation may not be applicable to them, or they are actually finding a spot between the regulated space and the unregulated space and are able to play there. uh, Fundamentally, the risk between fintechs and others is lower to the extent that fintechs are not as dependent on a single sector of the economy as other players. But the startup risk is constant across between fintech and non-fintech. But fintech, for example, if you invest in a payment company for that matter, say for example Razorpay, which is a large payment company, versus say a Make My Trip, which is a online booking site, which is also a unicorn. Make My Trip would have seen massive declines in their volumes because last year people stopped flying and traveling and booking hotels. But Razorpay saw a very small decline in volumes because though Make My Trip is their client and saw some decline of volumes from Make My Trip, they also have hundreds of other clients who are doing transactions. So overall, and some of those clients also saw an increase because the payment has moved to digital. So that's something where there is sector agnostics in fintech helps reduce some of the risk.
The other thing is, generally the large players like WhatsApps of the world or Googles of the world, they generally don't allow startups to grow. So what is your sense? I mean, either they put some different strategy to take over the company, or how's it?
No, so in India, I don't think that's a challenge. Though Facebook has introduced WhatsApp payment, it's not taken off that much. Google Pay is competing against Paytm or some of these players, but I think there is enough space for everyone to coexist. I don't think Paytm has dramatically seen declines in volumes because of other players coming in. They are growing volumes because they are
Yeah, Prajit, can you hear me? Please bear with us. I think he's just logged out and he's going to join back now. Yeah, Prajit.
Yeah, sorry, I think there was a drop in the line here. Sorry.
Okay, yeah. So I was saying that what kind of companies that you look forward for in your portfolio, A, and how do you how do you filter those companies? Is there a parameter which is well defined by you, or how is it? How do you structure the deal?
Company is already making some revenue and has tied up with some corporate clients, or has figured out
Oh,
the
your voice was
client.
breaking. Can you come again,
Yeah,
please? Yeah.
yeah. I think the internet connection here has been a bit unstable, but so what we are focused on is trying to make sure that some of these companies are, or all the or most of the companies are basically making some format of revenue and have tie-ups with corporate customers, etc., which have got confirmed outlets of making revenue. But the core concept is that we look at the product in detail. For example, in case of EaseBuzz, we have gone and identified, we've evaluated the product by someone like GTN and Amrish, who are veterans in the payment space. There's a payments company, so they've looked at the product. We looked at the tech. We got the ex-CTO of PayU, which is one of the largest payment gateways, to see this company. We've appointed BDO to now do the tech audit. Then we have looked at the target market, how big this can get. So we've looked at Razorpay, some of the other players worldwide, and how much of the India market is unpenetrated. We looked at the team, what the backgrounds, how smart they are, whether they're sort of able to handle this business. We've looked at how we can exit. So we know there are some people like GTN and Amrish are also investing with us, and they have exited their previous company at a multi-bagger to their investors. So hopefully those are the things we look at. We look at very reasonable valuations. There is no secret formula. There is a certain amount of thing that we seek in terms of comfort with the founders. I've worked with some of the people in the industry who have been quite, challenging, and have sort of, I've seen different people in the industry who have sort of done different things which are not great. So I can identify founders who are sort of may not be clean. So I am able to find out some founders and do background checks, etc. Hopefully we can avoid some of these people. So that's some of the things that we look at while we are making investments.
Sure. So, what kind of returns one would expect by investing in the fund now?
So we are expecting uh, carry, but pre-taxes over a 6-year period. I guess there's a question by Pooja. What are various upcoming future investment plans? That's what the question is. So
Please go
we
ahead.
are making. So hopefully, EaseBuzz is an investment we are making. It's a company that's highly growing quickly and doing quick revenue growth, and is doing well in the payment space. We are looking at a distribution company which has grown quite rapidly in the last few months, which is set up about 6-8 months ago, growing quite rapidly. They have moved from about uh, about 10-12 lakh revenue in October, November, to now doing more than 1 crore revenue in the month of March, and hopefully increasing. So we have got a pretty good deal because we'd invested with that founder in my previous entity, and hopefully, and he had done well with that business. It's just that things didn't transpire well with his other co-founders, but now those co-founders are no longer with him, and we are hoping that he does well. So the previous investors from that deal are also coming out to this transaction. Besides that, there are 2, 3 other deals that we are evaluating. One is in the LRS space across borders, where people are HNIs, want to invest into American stocks. We're looking at that sort of a concept. There are other concepts also we are looking at in terms of onboarding technology to onboard customers with banks, financial institutions, etc. So, few things. We also have a few friends of ours who are funds in Singapore, funds in Bangalore, etc., who we co-invest with.
Okay. So, what is the duration, total duration of the fund, and and how much you are taking now, and what would be the drawdown period?
So the total duration of the fund is 6 years from the final close. We are expecting to close finally at the end of December this year. So hopefully we can close the fund by 20 December 2027. The duration of the fund is consequently we can extend it by a year each, getting three-fourth majority from the investors, but and the fee on that period will be a declined fee on just the balance amount. uh, the uh, the 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 duration I have explained. The second question of that was drawdown. Drawdown. We have drawn down 30 lakhs so far. Another 15 lakhs is due in April, followed by 15 lakhs next October, and 20 lakhs each in April 2022 and October 2022.
Okay. So anybody has any question, please feel free to type in your questions, and then we can ask him. All right. Some people are typing the question. So as you said that, would it be fair to say that one can expect about 25 to 28% IRR
Yeah,
of this?
we are hoping to uh, deliver that sort of amount.
And
There's a question by Rajendra. It says, "Is it a PMS investment?" Rajendra, the answer is no. PMS investments typically invest into publicly listed companies. This is a Category 1 AIF, BCF, which is a venture capital fund. We invest into startups. So PMS fund managers can't invest into startups, and we can't invest into public stock. Minimum investment, as per Rajendra, again, minimum investment is 1 crore. This is the SEBI regulation for. So we've drawn down 30 lakhs. We are drawing down another 15 lakhs and 15 lakhs in this year, and another 40 lakhs in the next year, making it 1 crore.
And Aparajit, for the benefit of everyone, would you be able to throw some lights on the taxation, although you're not supposed to?
Taxation is typically most of the investments we'll hold for long term. The long term capital gains, this is a pass through structure, so whatever the fund makes is passed through to the investor. There is no double taxation, so and there is no dividend distribution tax in this fund, but the tax on long term capital gains is 20% plus surcharge and cess. So the average is about 24.29 or something like that. That's the number.
Put together. Okay.
Yeah. For NRIs, for domestics we deduct 10% TDS and give a tax certificate to that extent, and the balance they have to settle in their returns. The For NRIs we are compelled to deduct the whole amount and remit the money to them. Whole amount of tax. They can obviously offset that if they have got other losses arising.
But how do they see the appreciation coming in? Because generally, the auditors, when they audit, they would consider the conservative figures, and there is no
So
intention.
today, for example, the NAV is being recomputed. So hopefully we are going to arrive at an NAV, and we'll inform you shortly because of this investment appreciation. So the new investor will be coming in at a slightly appreciated NAV as against the initial 1,000 rupee NAV. So it should be around 1,100 where the new investors are coming in, give or take 10-15 rupees back or forth. Ankita has asked, what is the matrices for a unicorn? Is it defensible in its pattern? Why should the investor choose it? So, Ankita, there are larger investors which put money directly into unicorns like SoftBank or Naspers, etc. We typically find startups in the early stage, and hopefully, few of these companies will turn out to be unicorns or unicorns. The matrices for unicorns are typically these companies have large number of customers and are able to grow quickly and reach some sort of revenue. Many of these companies may or may not be breaking even, so they might be burning money. But the main parameter for defining a unicorn is that some large investors come in and put a reasonable chunk of say 20, 30, $100 million into these companies, and that at the time of that funding, the valuation of that company was more than $1 billion, or more than 7,300 crores. Is it defensible in its pattern? Uh, Hopefully, these unicorns are large enough that they have created a sort of moat around them and have created large enough customer base to be able to sustain themselves and to be preventing newer customers from taking over. But that being said, some of the times what happens is that technology is evolving quickly. So, for example, about 5 years ago, PayU was one of the largest payment gateways in India. Today, Razorpay has built newer technology and is competing against them very well. There have been, and that has been the case. So, if you look at companies in the 90s, if you remember, Yahoo was the dominant search engine, and a few years later, there were 27 or 30 search engines, and Google came through. So, uh, defensible, hopefully, yes, sometimes no. Post that, there has been any more questions?
Just check the Q&A box.
Yeah, so Nikita has asked, Oliver has asked, in case of early exit, say third to seventh year, will the AIF facilitate exit? So the answer to that is that we are hoping we ourselves try and make the exits. Many a times, so exits are challenging because if you make the exit too early, you lose money, and if sometime you don't make the exit, the company goes down, you lost money again. So it's a challenging process. Hopefully, we are able to find companies to exit at the right time. And as and when we exit, we return the money to our investors. If, for example, we have made 20 investments and 5 remain unsold at the end of the 6th year, we may ask the investors to extend the fund for a year so that we are able to sell off the investments during that period and return the funds to the investors. Nikita is asking, what is your view on the statement that US regulatory environment is hindering future growth of fintech industry? I don't think US regulatory environment is hindering future growth of fintech. In India, there are some regulations which are preventing cryptocurrency, but we don't typically look to invest into that space. Pooja has asked, what are the various measures would you suggest to avoid corporate and international double taxation? Hopefully, you are in a jurisdiction, Pooja, that is got a DTA treaty. If you have a DTA treaty, you shouldn't have a challenge. Whatever money we return to you, you should be able, after you paid your taxes in India, hopefully you are able to you are not required to pay taxes in the country of your residence. But in case if you are living in the US, there are some regulations called PFIC, which may require you to pay taxes early just on the appreciation, but where we have not paid out the money to you. And in the year when we pay out the money to you, you may not be required to pay taxes. Olivier has asked, what will the founders and the employees' personal contribution to the AIF will help to understand the skin in the game of the founders and the employees have to walk and talk. Yes, Oliver, the answer is 10% of the fund is put in by
Interesting
the.
question.
Pardon me.
I said interesting question.
So, Oliver, 10% of the fund's corpus is being put in by the founders. So, overall, the envisaged fund is 200 crores. Uh, and we have ourselves committed to put in 20 crores, 18 crores by Verenium Capital, and 2 crores by me in my personal capacity. I have already put in my 2 crore commitment, and Verenium has put in 5 crores. So we have got 7 crores in the fund at the moment. And externally, we have raised more than 60 crores. So we are still at the 10% threshold. And as and when there are more investors that join in, Verenium will keep putting in more so that they are more than the 10% threshold throughout the fund life. Our employees have put in, four employees have put in 25 lakhs each. So we have got 1 crore of our employee capital also involved into the fund. Uh, and as more investors come in, our corpus bloats and we keep deploying more capital from Verenium capital into the fund.
All right.
So Oliver, one more thing to sort of this thing in PMS as well as, so the minimum threshold for AIFs is that we have to contribute 5 crores or 10% or 5% or sorry, 2.5 crore or 5%, whichever is lower. We are well above the threshold and we are contributing 10%. So we are higher than the SEBI requirement in case of PMSs, and in case of uh, mutual funds, typically fund managers have very little skin in the game. In this case, we have a lot more skin in the game.
All right. So if there are no more questions, then we would like to conclude the call. I take this opportunity to thank all the participants for joining the call. And if you have any more questions, you can either write me or you can reach out to my team members also. Post this session, we want to share the detailed copy of the presentation with all of you. And I also would like to thank Aprajit for joining the call, answering all the questions so patiently. So thank you so much for sharing the insights, and we look forward to work more closely with you.
Thanks, Vikas. Thanks everyone for joining, and pleasure talking to you all.
Thank you. Okay.